All right, hi everyone. This presentation is going to be all about the Glo-Bus strategy game. We were a little rushed in class, and I want to make sure that I go over it in enough detail that you feel prepared for it. So, in the game, you are going to be controlling a company in a specific industry. That industry is selling what they call action cameras, which are, think of them as GoPro cameras, right? Cameras that you can mount on your helmet or on your bike or what have you for sports or outdoor activities. And then drone cameras. So camera-equipped drones, quadcopters. With each of those products, you sell the action cameras to retailers who then sell it to the end user, and then you sell the drones directly to the end user through your website. You're going to compete against the other teams in this class. You're all going to be selling the same products. And those products are all manufactured in one area of the world, in this case, Taiwan, and then they are shipped to one of four different regions, or all four different regions. The regions in which you can compete are North America, Asia Pacific, Europe, Africa, and Latin America. You all start in the exact same position as far as your last year's profits, revenues, market share, et cetera. Every decision round will represent 1 year in the game. The first decision you'll make is year 6, and we're going to go all the way through year 15. So that's 10 decision rounds. You'll be able to look at what year 5 looked like as far as your financial records. There's going to be reports you can view to see how sales were. It'll tell you how many video cameras you sold, how many drones you sold. You can see 840,000 video cameras were sold, 140,000 drones were sold. So you can see just how much more your cameras are as far as the product sales of your company. Now, the drones do sell for a lot more. The starting price, I think, on cameras is $225, if I'm not mistaken, and then $1,100 for the drones. So there is a possibility of making more money off of the drones than the cameras, but the demand for cameras, as you can see here, exceeds the demand by what's 6 times as much. Your first round will be year 6. The decisions you'll have to make include decisions on 6 different tabs and menus. There is a 7th menu, but it will not become available for you to start making decisions until year 9, so we'll cover that separately. The first menu is product design. This is where you're going to pick everything about the product, from the components, the various components that go into it, the number of features available on it, the total performance quality, which will be a star rating. It starts at a 4.0 quality rating on each product. The number of models. So even though you're selling an action camera, a GoPro camera, there's a number of different models. You start at 2 or 3, and you can increase or decrease the number of models. The more models you have, the more defective units, because of just the amount of variation in the products. So there is more cost into that, but it's more attractive to the end user to have more options available to them. So there's some give and take as far as that decision goes. And then how much money are you going to put into research and development? It costs you money to do that. It can pay off if you put enough money in early that the cost come down later on. But it's just going to be up to you to determine how much you're going to put into that. Because again, it will hurt your early game costs to put money into it. It could pay off by the end of the game by having a better product quality, though. Then you're going to have 2 separate tabs for marketing. The first one is for your cameras. The second one is for your drones. You're going to set the price of the cameras. You're going to set how much sales support you're going to give to the retailers, how much advertising budget, how much you're going to spend on web searches, and optimization there. How many weeks of promotional sales are you going to have? So how many weeks of the year is your product going to go on sale? How long is the warranty period going to be? And you're going to get to choose that. All those options, even though there's 7 options, you have to choose it for all 4 regions. So what are you going to sell it for in North America? It doesn't have to be the same as Europe, Africa, Asia Pacific, or Latin America. You can sell it for different amounts. And each of those regions is more price sensitive than the other. So more or less price sensitive. So you'll see how in your projections, how the market kind of reacts to a higher price or a lower price. Compensation facilities. So how much you're going to pay your workers, both their base pay as well as any incentives and bonuses. How much are you going to pay to train them? The more well-trained they are, the better your product quality. But again, it costs you money. So there's a give and take there. And then on your facility space, this is on the same tab. How the space works is that you have to increase the amount of space of your warehouse in 1 year, and then it's available to actually build workstations in that space the following year. When the game begins, you have 280 workstations for cameras, but you have space for up to 300. So you could build up to 20 more workstations right off the bat. If you want to build more than that, you'll have to build it in year 6 so that you can add workstations in year 7. And that's going to be like that for the whole game. You're going to have to kind of project your sales. And if you're not going to have enough workstations to build the number of products you want to build, you need to start building more space so that you can add more workstations in there. Similarly, on the drones, I believe you have space for 110 workstations and you have 100 workstations built. So you can add 10 more right off the bat if you want to. Corporate social responsibility and citizenship. This is going to be any charitable contributions, whether or not you're going to be more environmentally friendly, and then are you going to improve the conditions of your workers? All those things cost you money, but they will increase your brand image. So it'll be up to you to decide how much you value the brand image in the game. And finally, all this stuff costs money. You're going to get your money through your financing and cash flow tab. You can take out loans or repay them when you have excess funds. You can issue stocks to gain money, or you can repurchase stocks when you have money available to you. There is a metric in this game we'll see called earnings per share. And so the more shares you have outstanding, the less your earnings will be per share because it's divided among more shares. Conversely, if you have bought back stock, then the earnings per share will go up because there's fewer shares for which it's going to be divided between. You can also pay your dividends. That's going to help increase your stock price. People are going to want to buy your stock more if it's paying out dividends. You don't have to pay dividends. If you do, you get to choose the amount. You're going to be competing on all these factors: price, product quality, etc. All these things will determine whether your consumers buy your product or somebody else's. There's a set amount of demand in the world. All of this information will be in the participants guide. As far as how much demand you're going to be able to drum up is going to be based on the decisions you make on all of these things. They all factor into it. Highlighted here, it says there's no built-in bias that favors one strategy. So there's not a best strategy. You can be low cost, low price. So you're gonna have you're not gonna put much quality into your product, but it's not gonna cost you a lot, and then you're gonna sell it for a low price. So not that it's gonna be a bad product, but this is like, great value brand or Amazon Basics if you're looking at electronics. It does the job, and there is definitely a demand for that. There's a lot of demand for a low price option. Then there's going to be demand for that top of the line. Are you going to put a lot of money into increasing the product quality way above everyone else's and then selling it for a lot more? There's going to be demand for that. You're going to have a good brand image if you're going to do that, though, as far as what I've seen. And then more value for the money. You're going to charge a little bit more than the low priced option, and your quality is going to be a little bit better. So think of it like, you go to the movie theater and medium drink costs a little bit more than the small. It's not the cheapest option. It's not as much money, and it's not as much, soda as the large drink, but it's the one that people buy the most of because there's more value for the money there. Value doesn't have to mean cheaper. Value doesn't have to be more expensive. It's just the right price for what you're getting. So basically low cost, low price, high cost, high price, or anywhere in between. All of these can be the top performing team. It's up to you to react to the market and what everyone else is doing, and to kind of determine, are you going to make that strategy the same in all the regions? As it says at the bottom here, companies can pursue the same approach worldwide or have a different strategy for each of the 4 markets. You also don't have to necessarily ship products to different regions. You can completely abandon some regions altogether and not do sales there. It's going to be up to you to determine what seems the best for your strategy. Um, as it says here, any of these can succeed, provided it's not overpowered by the strategies of competitors, right? Is someone executing that strategy better than you, in which case they're going to sell more than you. You don't want to copy someone else's strategy because it's going to dilute the effectiveness. One of the reports that it gives you in the game after a decision round will kind of graph it out on a bubble chart on XY coordinates. And if you're overlapping with somebody else, it's really, you're probably going to be about the same score as them, whether that's good, bad, or somewhere in the middle. It just, you really kind of have to carve out your own niche as far as where are you going to be selling well and where are you going to kind of, the price you're going to sell it for, the cost, the brand image, the marketing money, all those things. But it all hinges, as it says here, on the interplay of your strategy decisions against everyone else. I've said this in class in case you missed class and didn't see it. You might find strategies online on YouTube or written strategies elsewhere that tell you this is the best way to play the game. None of those matter after the first year. They might tell you a good way to start the game off if you're pursuing a specific strategy. And yeah, for that strategy, it might work well for 1 year, but the game does not play the same every time. It's completely dependent on what everyone does. It takes all the decisions into account. It's like, grains of sand on the beach or stars in the sky. There's so many variations of how this game can shake out and what strategy will or will not work. And it's completely based on how you react to each other. So you'll have to be looking at the reports. A company's competitive effort vis-a-vis rivals is crucial. Yeah, it's completely based on the various competitive strategies that you use when pitted against competitive strategies of rival companies region by region. So not just your overall strategy, but also, some of you might want to undercut each other on price. Some of you might want to be completely different price to attract that consumer who's looking for a higher cost, higher value product, maybe in the Europe, Africa region, but then a lower price, lower cost in the Asia Pacific region, for example. You don't have to have the same strategy in all four regions either. The only thing I will say there is that because you're manufacturing into one place, your product quality will be the same in all those places. So you might find somewhere in the middle as far as product quality goes, but then spend more on advertising in one region than you do in the others. You are going to be given 3 different competitive intelligence reports with which you can kind of scout out what the competition is doing. You can see exactly where you stand compared to each individual rival, as well as the company averages. There will be changing market and competitive conditions in this game. Before you actually enter your industry, on the front page of the simulation, it'll tell you what the tariffs and importing costs are for each region. Be aware of that. Those change, and I don't believe they're the same every game. I don't know if they're completely truly random, but they do change over time. So there'll be some times where it makes more sense to just have one region versus the other and not maybe do as much business in one region that year. There will be times where the demand changes quite a lot from 1 year to the next. You're going to have to kind of look for what the projections say. This information, again, is in the participants guide. So it will definitely behoove you to read through that. Closely approximate to the real world character of competitive businesses. Yeah, you can assume that all these things are based on sound economic and business decisions. Trying to run your company in a way that's like extremely gambly or not sound in the real world will not do well in this game. You want to make decisions that would make sense if you were actually running this company in real life. So that means executing real world strategies, not trying to in any way try to game the system in some way, like low cost and then selling it for 10 times what everybody else is selling it for. It just won't fly. Those decisions won't go well. And you're going to be near the bottom of the leaderboard each week if you try to something completely outrageous. Now, it doesn't mean you can't try to come up with something creative. There's a big difference there. There are creative ways to go about how you succeed in this. Um, Yeah, you're going to be provided very detailed feedback on the outcomes. There are so many reports you can comb through and so many different, so much feedback on them. And then it takes about 15 to 20 minutes at the end of each round. So every Wednesday night going into Thursday night in our class, you're going to be given those decisions. So, check them Thursday morning and see how you did. And you can start coming through those reports. You can download those reports and start making yourself a big spreadsheet to help make better decisions in the future. You can access this from your phone. It works just fine on the phone. I've done that. Any internet enabled device. If you're meeting in person, you can use the same device for everyone, or you can work together. Whichever one of you hits the save button last, it'll be whatever decisions are on their screen that override everyone else's. So you need to communicate well and cooperate well in that regard. I'll show you though, if you're working at the same time, there is a collaborate button or collaborative mode button, and that'll ensure that you can all see each other's decisions in real time without having to refresh. Your board of directors gives you 5 different things you have to do. You have to have good earnings per share that grow every year. These are the specific earnings you have to hit. This is what the investor expectation of the game is. It was 75% last year, meaning year 5. So your first decision round, you need to hit at least $1.25 to meet expectations. And that just keeps going up and up and up, all the way to $14.50 by the last year. You need to get a good return on your investment or return on equity. So this is all the money you put into your company, the business, the factory space, workstations, the money you put into advertising, all those things. Are you getting a good return on that? You have to be at 17.5% a year in year 6, so your first industry round, and then it goes up by 5% a year for the first several years. And then the last few goes up by 2.5%. You need to be at a $20 per share stock price by the end of year 6. This keeps going up all the way to $350 per share. You need to be at least a B+ credit rating at the end of this first 2 years, and then go to an A- for the next 3, and then at an A or higher for the last 5 years. Credit rating is based on repaying your loans promptly, not taking out too much money, not taking out emergency loans. And then a good image rating. You need to be at least 70 to start. And then it only asks you to get up to 80 by the end of the game. I've seen the most successful teams get up to 99, 100 though. Image rating seems to be pretty important in this game, especially if they're in a similar strategy that somebody else, because it'll convince the consumers to buy their product versus somebody else's. So equal weights to all 5 of those: EPS, earnings per share, ROE, return on equity, credit rating, stock price, image rating. The game gives you an equal 20% rating. So 1/5 of your total score will be based on each of those 5 metrics. Your overall score though, so overall score as far as your output is going to be based on 2 different things. So 1/5 of the score on each of those 5 metrics, but there's 2 different scores in this game. One score is the investor expectation. So that takes into account, did I meet the game's expectations? Did I get my EPS up to $1.25 the first round? Am I at least a B+ on credit rating, and so on? But you're also scored based on how well you compare to the other competitors. You're not playing solitaire here. You're playing against other teams in a competition. So you're going to be given a score on 1 to 20, with 20 being the top performing team. As long as the top performing team is at least meeting the expectations of the game, they're going to get 20, and then everybody's going to give a percentage of that. Now, everyone that is meeting the expectations and is exactly at the same amount, they could all be at 20 conceivably. So if you have several teams that are at an A+ credit rating at the end of the game, they're all going to get 20 because you can't go any higher than that. The investor expectation score can give you bonus points above 100 total. You can actually get up to a 24 out of 20 on investor expectations if you are completely blowing away the investors. So for that reason, even though you might not be doing great compared to the other teams in the class, that score can get up to 100 points. The investor expectations, if you are far exceeding the expectations of the game, you could get up to 120 points on that. So that gives you some wiggle room where your overall score could be 110. So it gives you some wiggle room to get above 100% on your performance of the game. As it says here, the help sections, page 1, 2, and 3 of the journal on the output, and then also this is fully explained in the participants guide. I'm going to keep saying this, the participants guide, you have to look at it or you're not going to succeed. No matter how much I tell you in this PowerPoint and in class, you have to read that participants guide. It has so much good information on how to actually win. You will have 2 open book quizzes. The first one it covers the participants guide. So you're going to be quizzed on how well you understand the participants guide. This will be due the same time as your year 6 decisions when we go live. So we are going to be playing 2 practice rounds. We're going to do year 6. You're going to see the results. We're going to do year 7, see the results. And then after that, I'm going to reset the game back to year 6 again, and then it's going to count for real. So when that real year 6 starts, that's when your simulation quiz 1 will start. And then the quiz 2, you have a considerably longer amount of time, but it is a lot more in depth. It covers the stuff that's on the reports. It covers the drone journal and camera journal that you're going to be keeping track of, and a number of various aspects that you'll know based on the results of your games so far. That's going to be due much later in the semester. At the end of the game, you will be asked to evaluate each other and evaluate yourself. These will be confidential from your team members. We're going to be doing that at the midpoint of the game, and at the end of the game, you can check the syllabus for when those dates are. You will have to give, it's expected that you're going to have a long-term strategy in the game and think strategically in terms of how you're going to react to what your competitors do. Do we need to adjust our strategy? It is a strategic battle of wits. Am I going to set my price for this price or that price? Am I going to spend this much money in advertising dollars? Because you don't want to spend more money than you have to, but you might want to spend more than everybody else. So a lot of that has to do with the projections of the industry. The better you can project what you think the average of the industry is going to do, the better you're going to be able to project your own score each round. That'll make more sense when I show you the actual simulation and what the menu looks like. Drawing together information and lessons from prior courses. So what you know about finance, what you know about one thing from if you've taken operations management, business statistics, business decision analysis, or quantitative methods, we covered, and also marketing analysis, we cover projections and forecasting in those. If you can build yourself a forecasting spreadsheet, that'll help you a lot as far as what you are projecting the industry averages are going to be. Understanding the cost, revenue, profit formula, and how those all interrelate will help you out as far as making good business decisions and getting good results. Everything is through the Glo-Bus lobby. Entering a company name. So if you haven't already, please make sure you give yourself a company name based on the letter that your team starts with. So if you start with an A and you wanted it to be, Aces Up was my team name because it's, I was in the casino industry for a long time. But you're just gonna pretend like the first letter of that team name already exists. So we just wrote CES, not Aces, ACES, but just CES to start it off, because the game will plug in the first letter of your company name. So you don't write the first letter of the company name twice, is what I'm getting at there when you assign your company name. So give it something fun, whatever your team comes up with. And then, select a team name that reflects the image you want to project, or just have fun with it. But it is public, and it should be appropriate for a classroom setting. Decision rounds are strictly enforced. It's whatever round, whatever decision was last saved, that's what will result in your team's decisions that round. So make sure you're coordinating well with each other. It takes about 15 to 20 minutes, and then you'll get an email as soon as the results are ready. And you can, if you're up that late, by all means, check it out right away if you're a night owl. But otherwise, I would definitely check it the next day. There are tutorials on the Glo-Bus site. They're very helpful. Learn as much as you can from the practice round. So download those reports. I would take screenshots with the decisions you made and just kind of see how it went. And if it went well, do something kind of similar, but not necessarily identical, because other teams that didn't perform well, they're going to make decisions better when it goes live. And so it's not going to be exactly the same from the practice to the simulation by any means. But if you're on the right track, you're near the top of the leaderboard, yeah, you probably want to do something similar. It sounds like you made a good strategy. You might have to hone the tactics and operations based on what you think other people are going to do. Be wary of trying something highly imprudent or highly risky or unbusinesslike. If you try to game the system, you usually shoot yourself in the foot. Be professional, make good decisions, but also, just as you're held accountable in the real world for your decisions, you need to be a team player. So don't let your team down by not showing up to your decisions each week, not doing doing the research you're supposed to be doing, not entering your stuff in your journal and so on. Be prepared to make good decisions with your team. So be a good team player in that regard. All right, I'm going to hop over to the actual simulation itself now, and we'll go through that for just a minute. All right, here we have the actual simulation, what it would look like. And so you've got your decision entries at the top here: product design, camera and drone marketing, compensation facilities. This special contract offers, you can't do this till year 9. How that works is if you have excess capacity to make more units than you need, you can sell the excess as a special contract directly to a wholesaler. This is something where like Costco has Kirkland brands, but really it's name brand stuff that they market as Kirkland. That's where this kind of stuff comes into play. And then corporate citizenship, finance and cash flows. These are the decisions you can make. And then after that, you've got a camera and drone journal. You have the overall scoreboard, which will tell you your investor expectation, best in industry, and then a weighted average of those two. It is a 50-50 weight. Some professors do make it more on one or less on the other, but it's a 50-50 by default, and I'm going to keep with that default. There are also some bonus points you can earn. I'll go over that shortly, and that gives you an overall game-to-date score. It also tells you how you did on each of the 5 metrics, so EPS, ROE, stock price, credit rating, image rating, and then social responsibility. There's a award winner for the most responsible teams. And then bonus point, you can get a bonus point if you are accurate on your forecasting. So you have to be within 5% on your projections on revenues, 5% on your earnings per share, and 4 points on your image rating. If you're accurate on all 3 of those, you get a bonus point, and that is cumulative. You can earn this several times, and it'll affect your overall score. It'll add 1 to your overall score. Leapfrog award, each team that has the biggest net positive gain in their overall score from 1 year to the next, they get the Leapfrog award, which gives you a cumulative bonus point. So bonus points will add up here. If you had a weighted average of 95, but you had 3 bonus points, then you'll have an overall game score of 98. And the overall game score is what counts. So you want to get those bonus points. You want to be accurate on your projections. You'll also be able to see various overviews, financial statistics. Financial statistics is good because you can see where everybody's at on shareholder equity, how many stock shares have been issued or repurchased, how everybody's doing as far as cash goes, total assets, total liabilities, what their costs are. You can compare your cost to other teams' cost. Benchmarks. This is where you can tell, am I spending too much or too little compared to the industry average of the components and features in the camera, the components and features of the the drones, the cost of, so cameras and then drones are separate. The research and development, how much are you spending compared to the average? So let me go through a few decisions. Let's say that we started by upping the price to $250 on each of these, just for an example. Maybe we'll do 235 in each of these spots just to show a different place we could sell it to. Well, our image rating went down because we're selling it for more than everybody else, but maybe we expect that everyone else is going to up their price a little bit. So maybe let's up our projection down here to some higher price. Maybe we think the average is going to be $235. Well, now if the average goes up, then our projections on the left side are going to change accordingly. So all the decisions you're going to make are in blue, or in some cases, more of a purple color. But then your assumptions about what the market are going to do are both on the marketing tab, and you have to put your projections on what you think the averages are going to be for all of the companies in the industry each round. So if you think that the product quality is going to go up by everybody by, half a point, you can up that. If you think that people are going to do more models or less models of each of the cameras, you could up this. If you think that people are going to give 2 weeks of sales promotion on average, you could up this projection, and so on. So you're going to want to make some competitive assumptions each period, and you make those assumptions for both drones and for the cameras separately. Okay. And then in your product design, you can decide, okay, well, you know what? I'm going to make I'm going to up the image sensor by a little bit. I'm going to up the camera housing by a little bit. I'm going to give extra features. And now I'm at a 4.5 star rating, where I was at a 4 before. But as far as all these things, we started 20,000 in research and development. Maybe I want to put more money or less money into that. Maybe I put less money into it. Well, now my earnings per share went up because my cost went down. Whereas if I put more money into it, my earnings per share go way down. It could pay off in the long run, but you're going to be in a hole as far as cash on hand early on. So same thing with the drones. I could decide, do I want to give it an upgrade? Do I want to have a better battery pack or a better flight controller, or maybe more drone models? All these things cost me money. You can see my earnings per share have gone down. My image went up. My return on equity is not great, but maybe now that I have a better drone, I can charge more. Okay. Market like that. Market like that. So as I'm making the decisions on the left side, my projections are going to change. Are they accurate? It depends on these will be accurate if your assumptions are accurate. So the more accurate you can be on what the market's going to look like on average, the more accurate this projected performance are going to be. If you make all the changes and decisions for yourself every period, right? If I just change all these things and I buy back, how much stock can I back? 200,000? Sure. If I buy back all that stock, I can see the projections, but this projected performance doesn't mean anything if my assumptions are wrong. This will always default to whatever it ended with last year. You're going to want to make some changes to it. Don't expect the industry to stay flat on all these metrics year over year. It's not going to. Your competitors are going to change in some way. Some of the prices are going to go down. Some of the prices are going to go up. What you think it's going to average out to is important. So as you go over the first and second years of this, in year 6 and 7, see how the price went up. See what everybody else did. Did everybody increase the price by a little bit, or did they increase it by a lot? Right? That would be a lot. Yes, it projects it's going to go up, but how'd that affect your brand image? How is that accurate on these metrics as far as product quality went? Are people going to spend more on retailer budget? Are people going to give a higher warranty period? It starts at 60 days warranty, but you can get up to a year warranty. So all these are decisions you make in up here at the top. If you're going to put more money into advertising, if you're going to put more money into number of sales promotion periods in Asia Pacific, all these things affect your performance. So this is all of the price for each of these. Let me just go through each tab real quick. So these first, everything up here are going to be the actual product, physical components of your product. Same thing over here. All these are physical performance, physical parts of the components of your product. Then you have extra features. This would be like something in the menu, things you can do. More features. The better this is, the better your star rating is, but the more it costs you to make it. The number of models is exactly what it sounds like. I'm going to sell 3 different models or 4 different models. Maybe selling more or less is better for your, the more models you have, the worse your product quality initially, because you're introducing new models to the market. The fewer models, the higher this is, because you can focus on just doing one thing well. But the market's going to react to that in different ways. So that's the camera and drone design. Marketing, you have the price, you have how much money are you going to pay your retailers. The more you pay your retailers, the more retailers are going to want to stock your product. The more you advertise, the better your brand image is. And the more money people are going to want to buy your product. It's not going to always jump it by a full point, but you can see that one just went from 73 to 74 when I upped it a little bit on at least 3 different regions there. Okay. Website displays and infos. This still speaks to marketing and advertising. Sales promotion. Your product goes on sale. You'll have higher revenues, but your product profit may or may not go up. So it went up a little bit there on net revenues, but then profits went, let's see, 36,694. Yeah, profits barely changed by that. So that one didn't have a big dent. It seems like the sales aren't reflecting well in Latin America, right? But again, all these things that you choose to do are all going to speak to your strategy. You sell this online, but you might sell some to a third party to like, some retailers would sell on Amazon. So maybe you're going to give a discount to them. You have to give them a certain amount of discount. I don't know what that amount is, but your I believe in this one. Maybe it's just in the business strategy game, which is the graduate level version of this. There was a part, unless I'm forgetting it, where you basically couldn't sell. There had to be a certain percentage difference between the amount you sell it for and how much you're selling it to third party, or they wouldn't buy it. But maybe that's not the case in this version. So I might just be conflating those two. So that's your drone sales. Your compensation facilities, how much are you going to pay them more or less from last year on your base wages? If this goes up, your productivity, this will tell you how many units you can make. So if we give them a raise, it goes from 3,200 to 3,221. You'll make more units per. The PAT is the number you make at each workstation, number of people you have to have at each workstation. So this is the productivity per year of each of those people, but it takes 4 people to work at each workstation. Now, one of the things you can do at the bottom here is you can initiate a robotics upgrade. It is very expensive. You can see that my ending cash went from 26 million to negative 12 million. In the long run, it can pay off, but it's going to tank your money early on. It makes it to where you only need 3 people at each workstation. So you're able to produce a lot more units with the amount of people you have working for you, but it's very expensive. So determining whether you're going to invest into that will be a big early decision. But like I said, it's very expensive to do. It could pay off in productivity in the long run, depending on all the other strategic decisions you're making. Best practices training. This is usually good to put some money into because it will increase your productivity and the number of defective units will go down. And then corporate responsibility. Are you going to contribute to charity? If we want to really up our image rating, we could put yes on all of these things and donate a lot of money and initiate all those. And we just went from like a 71 or 72, whatever it was at, to 76. But it really dug into our profits though. So you have to determine how much of each of these you're going to do. And then financing cash flow, maybe you buy back some stocks, or maybe if you don't have any money, maybe you issue stocks and you get some net cash that way. Your earnings per share will go down if you issue stocks. It went from 178 to 176. It's one way you can get money though. You could also take out a bank loan. The longer the loan, the higher your interest rate. If you have excess cash, you can see how many loans you have out. And maybe with this 27 million excess cash, I'm saying million even though it says thousands because all of these numbers are in thousands. So 16,000, 1,000 is 16 million. So I'm just going to say 16 million. You could pay this one back early, potentially to save yourself this high 8.5% interest rate. Typically, if you're going to pay back a loan, you got to decide, am I going to pay back the higher interest rate early or am I going to pay out the smaller cost just to not have any interest accrued on that? So maybe I pay back this loan early and maybe that'll help my credit rating in the long run. And so these are kind of random decisions. I'm not making sound decisions, but if I were to save these decisions, yes, I'm going to save them. And now if I were to go and those decisions were processed, we can see the results of those. So this is going to take about a minute. I'll come right back to this to see how that did. But I can then start thinking about, didn't really up the quality of my drones very well. I probably should have done that too, just to see how the drones reacted, but we can see how it looks. So like I said, this will take about a minute. This will refresh on its own. And then we can see what my score is for company A compared to the other companies. And then I'll look at some of the reports. So again, these were random decisions. These are not sound strategic decisions by any means. But you can see how this kind of shook out compared to the other three companies. All right, any second now, this will be ready to go. Let me go ahead and just pause this while this is, oh, there it went. Okay, so now we can see, oh, well, my random decisions did really well. I ended up with 107 overall score. So random worked out in this case. That's pretty funny. I've had as low as like a 65 on my random decisions when I've been doing these examples. But now I can see the intelligence reports. Okay, so competitive intelligence reports. I can go down here and see on the scoreboard, here's my overall score. I wasn't accurate on my projections. If I go to bonus points, I can see my forecast for revenues was 411 million, but it was actually way higher. So I actually exceeded it by 7%. I exceeded my earnings per share by 29%. And I exceeded my image rating by 9 points over projection. Who would have seen that company? But that's because none of my assumptions were correct. So whatever I had here, I was actually doing better than my projections. Great, but totally inaccurate. I could have very well done way worse than my projections because I was not accurate at all. I kind of undervalued or didn't change enough things as far as what I thought the market was going to look like. So now it's been updated and we can see what the averages were last year. Now I would have to change it again for next year. If I look at the competitive efforts, I can see, okay, I was at a 4.7, which was the industry average. B was higher than me. I was a little bit higher than them. No one achieved a competitive advantage. A competitive advantage on product quality rating. This is in the participants guide. If you can get half a star above the average, you get a competitive advantage and more people want to buy your product. All of these are by region. So it just shows you North America. If you want to look at Europe, Africa, Asia Pacific, you have to change the thing to each of those. But again, you can see how you stack up to everyone on both cameras and drones. On cameras, you can see at the very least, I carved out my own niche. I was a very high advertising dollar, not that high on price and product quality. So I'm kind of middle of the road. This would probably be probably more than I needed to spend to achieve this because I had, the price was right for the consumer. I was actually the lowest price at $250 in Latin America. So I probably could have sold it for more. And then North America, I didn't sell as much as I could have. So I was selling it for way too much. And if we look at the market share, I only captured 20%. So the bubble chart is how much you sold, and we didn't sell very many. We could have sold quite a bit more. 225 units, 225,000 units, by far the lowest amount of units sold. And then for drones, we did have our own spot in the market. It just, the low price, low product quality, but the consumers reacted well to that. So we actually had the highest market share as far as the drones went, because we were way cheaper than everyone else. You can see how much people jumped it from that initial 1,100 up to 2,350. They more than doubled the price. This number is going to track year over year what the industry average was in each industry. In each region. So this is where you can get your information as far as starting to make your projections and start to build out a forecasting template, a spreadsheet for yourself. You can see, okay, this price was 225 here, 301 here. Maybe by the time you get to year 6, 7, or 8, when you have 6, 7, 8 all available, you can start building yourself maybe a moving average or a weighted moving average, or even try to see if it's going up every time. Maybe a trend analysis would be appropriate, but you can start building that out. This is by company year over year. So if you want to look at specific companies on the time series analysis to try to see what other people are doing. But these 3 competitive reports are going to be your friend throughout the simulation. You're going to want to take a look at that and get the information what you can. Look how you're doing to your fiercest competitor, how they did. Look how you're doing compared to the industry average. One thing you'll also want to look at is under the benchmarks. Okay, so the industry average for the LCD screen quality was 1375. My quality was 10. Do I want to be above average or not? If you're looking at where can I be the top on all of the different products to have the highest product rating, you need to be beating the average. So I was at the average on image sensor. I was above average on camera housing, but that's about it. R&D expenditures, I was the lowest, 20,000. Everyone else went higher. 24,000 average, 28,000 was the high. Money spent on total expenditures throughout, this would be all of the R&D cumulative expenditures from the start of the game and on. So it tells you had 45,000 so far. Every team does going into it. You can see how much you're paying your workforce. This is good to know if you're paying enough to attract quality workers. And then it also tells you what your total cost to actually make each unit. And that includes production cost and assembly cost. Ours were the cheapest. We're selling for the lowest price though. So that's the random strategy that I put forth. All right, I hope that is helpful to you. Everything else is just your own operating reports, so you can see how you are doing. It'll tell you what part of the market share you got. Very detailed reports. You're going to want to kind of comb through it as far as what your investment is in your facilities. All the very detailed analysis of your company is here. Too much to go through on this, but comb through that. And then your cost profit breakdown in each region. This will help you adjust your price in each region a little bit better for both cameras and drones. And then your financial statistics just speaks to your bottom line as far as how many loans you have outstanding, what your return on equity is looking like, what kind of when your loan repayment schedule should look like. All your cash flows are all here, going all the way to your operating profit and loss. This is important to look at. Okay, we definitely are doing good in North America and Europe, Africa. We are doing poorly in Asia, Pacific, and Latin America. We're barely staying out positive. So while we had a good company total, we barely contributed in those. So those places are at risk for costing us money if we don't make some adjustments. If you want to export those reports, you can do that here. So the camera drone journal, the competitive intelligence reports, and the company operating reports, you can export them for each year as an Excel file. And then if you're making decisions each round and you want to reset what you did because you're like, you know what, I don't like the way this is looking, you can click on reset entries for that round. And that'll return it back to the start of that year. All right, I hope that is helpful to you guys as you make your decisions. I know the video is a little bit long, but there's a lot to cover. And I want you to be able to return to this as you have some questions. Hopefully they're answered here. And then every other question you're going to have is going to be in this participants guide. Please read through it. If we want to know your score, for example, how you do well on the different scoring your performance. Very detailed on what investor expectations mean. Very detailed on what best in industry gets you. All of these things that you need to know, they are in here. They will help you immensely if you read them. If you don't read them, you're probably not going to perform well. It's that important to you. So thank you guys. Let me know if you have questions, as always.